Hey guys, it's Breon over here with the Mortgage No again. I wanted to go ahead and reach out and make another video. I've been really looking into what this next video should be about, and if you can't tell, I'm actually in my office today. Um, so, a lot of questions I get a lot from a lot of friends and family, more or less than clients themselves, are: does property type actually matter? And the answer is yes. Property type is going to matter. See, there's a whole list of different type of properties that you can have. You can have a single family home. You can have a PUD. You can have a condo. You can have townhomes. You can have manufactured homes, mobile homes, and even modular homes. It's a huge list of different types of properties that just right now I'm listing off that qualify for mortgages. Then you can have houseboats, you can have condotels, you can have a huge list. And it just goes on and on and on because in today's society, people like options. And that's the big thing to keep in mind is people love options. So when you're looking at houses and you're determining whether or not you should purchase or if your home qualifies for a refinance, keep these things in mind. On a single family home, that is the most common home to go ahead and refinance. What that means is that obviously it was built and all the supplies were brought into the location. It wasn't a prefabricated home and then brought onto site. It means that they actually went, got contractors, built the home from the ground up on a permanent foundation, which is why you have foundation checks and city compliance issues that typically you have to go ahead and come up with. So, single family home is the most common home to go ahead and work with. The next one is townhome. Now, townhomes are almost a lot like a single family home, except that they can most often become confused with condos. The reason being is usually you share either a common wall or a common neighborhood with a lot of similar size homes that look like condos. And normally, when you're part of one, there's what they call a homeowners association. Now, those aren't bad things in the area, considering homeowners associations are meant to help keep the home values up, if not increase the home value of the area. So it's not a bad thing to have a homeowners association. But if you have a homeowners association, depending on what the bylaws in that association say, which you can find in the CC and Rs, and that's obviously the rule books that go over what they're willing to cover. Depending on what that lists and what that's willing to cover, will determine if your property actually is a townhome or if it's considered a condo. Now, on a condo, again, you can have a multitude of different types of condos. You can have a standard condo where you have anywhere from single level all the way to a three-story condo, and it qualifies. But then you can have things like a condotel, which is it's a condo, but it has amenities like a hotel. Like it has a pool, it has concierge service, it has room service, it has things like that that are going to go ahead and throw that thing off a little bit. And when you have items like that, that means that it's no longer just a typical refinance. There are a lot of bylaws and a lot of guidelines that you have to try to follow through with. So when you deal with that, you want to make sure that you ask your lender before even wasting your time, hey, do you work with condotels? Or, hey, do you work with condos? And depending on what the lender says, we'll let you know if you're wasting your time. Most lenders will work with a condo, but not a condotel. So just keep that in mind. Also, when it comes to condos, usually a little bit of a longer refinance process because there's more paperwork and often people associated with your condo that you have to work with as well. And then, of course, there are what we call manufactured homes or mobile homes. Now, those are two different things, and I don't want to get that confused. So you have a manufactured home, which is a little bit wider than a mobile home. And what that means is that it was built off-site. Let's say you went to a steel factory and they built all the walls and the roof and the floor, and all they did was they brought it on site and put it together for you. That is considered a manufactured home because all the pieces are already pre-assembled. You just go pick out which pieces that you like and want to see in your house. They can be rather luxurious. They can also be rather run down. It just depends on really what you're getting into. So don't take it as a negative thing that you're living in a manufactured home. The things to keep in mind that will often get in the way of working with a manufactured home is people want to make sure that it's permanently fixed or it's set in a permanent foundation on the property. They want to make sure that the house isn't going to be able to be picked up and moved to another location. Because if a lender's going to lend on it, they want to make sure that that property stays where it's at because that's what they're lending on. That's the collateral. But on a mobile home, obviously it's going to have some wheels. It's going to have an axis. It's going to have an ability to go ahead and transport itself. Now, if you take that off and you set it up on a permanent foundation, which is doable, then obviously at that time you can refinance them because you want to work with it. Also, real quick, circling back, on a manufactured home, you can have a single wide, a double wide, or even a triple wide. Now, most common lenders will only work with double wides or bigger. Single wides, you usually want to try to check with your local credit unions. Those are the most common companies that work with manufactured homes and properties. Their guidelines seem to be a little bit more open and a little bit more free for it. And then the last thing, just so that way we're not causing any confusion, is we're talking about manufactured homes and mobile homes. That is not to be confused with a modular home. So a modular home is built instead off of a room-by-room basis. It's almost like going to IKEA, and when you see that 219 square foot house that they show you how to design, it's like taking that one room and then combining it with their 415 foot room, and then combining it with maybe a 500 foot room. So you're doing a lot of work, and it's being done, but it's built on a room-by-room basis. So it's not manufactured. You're just picking out a room that you want to go ahead and have pre-built and brought in, but then it's all set up on a permanent foundation. No modular home has ever been set up on a non-permanent foundation, because that's how they build the walls. That's how they set up your room-by-room guarantee. So there's a lot of different things that can happen when you're looking at houses. And, of course, there's a lot more information I can dig into. But if you like this information, go ahead and do me a favor. Click like on the link below and follow me. Otherwise, I will go ahead and make sure I'm sending out great content every week so you know what's going on. Again, Breon Bradley with the Mortgage Know. Hope I answered any questions that you guys may have. If you have anything additional, shoot me a comment or shoot me a personal message, and I'll do my best to answer. Thanks.